Hello friends, first of all welcome of all of you in this video lecture series of 12th Commerce Sectoral Practice. From this lecture we start 10th topic, that is dividend and interest. Dividend and interest. First of all, my question is, what is meant by dividend? What is meant by dividend? Because this concept is not new for us. We studied in 11th standard also, in 12th standard, in previous chapter we studied this concept, that is dividend. So in simplest form, dividend is the portion of profit. Dividend is the portion of profit which is distributed among the shareholders as a return on their investment in the company. Okay, so introductory part of the topic. Profit making and its maximization. Profit making and its maximization is the prime aim of all business organizations. Is the prime aim of all business organizations, including a joint stock company. As we discussed in topic number first, that is corporate finance, one of the aim of each and every, that is there are two aims of financial management. First is profit maximization and second is maximization of owner's wealth. So maximization of profit is the traditional approach. Maximization of profit is the traditional approach, but it is a very important approach, that profit earning and its maximization. Profit earning and its maximization is the prime objective of the joint stock company. The shareholder invest with an aim of earning return out of the profit of the company. Each and every shareholder, may be equity shareholder, may be preference shareholder, when they take decision, that is investment decision, and invest their money in the form of share, maybe in equity share or maybe in preference share, they invest their money, take into consideration that they get a higher rate of dividend. They get higher rate of dividend because it is the interest, it is the common interest of shareholder, that they want a higher rate of dividend. So what is meant by profit? So the profit is just a difference between revenue and expenses for a given period of time, generally for a one financial year. Dividend meaning, the term dividend is derived from Latin word dividendum, which means that which is to be divided. In Marathi, the meaning of the word dividend, that is labhansh, that is part of profit. Labhansh, that is part of profit. So part of profit which is divided and which is distributed among the shareholders as a return on their investment, known as a dividend. So it is the part of the profit. Dividend is the part of profit of the company which is distributed among its shareholders. it is known as a dividend. And in other words, dividend is a share in dividend is a share in distributable profit of the company. Dividend is a share in distributable profit of the company. Distributable profit of the company to which the shareholder is entitled where it is formally declared by the company. Means dividend is must declared by the company. It is share in distributable profit of the company, and the shareholder have right to receive the dividend. Shareholder have right to receive the dividend. So dividend is the share in the distributable profit of the company. Share is the distributable profit of the company to which the shareholder is entitled when it is formally declared by the company. Means share dividend is declared by the company, dividend is approved by the company, and it is the share in the distributable profit of the company. Then what is meant by distributable profit? Distributable profit means the profit of the company, the profit of the company, or as per companies act, the profit available with the company to distribute to the shareholder by way of dividend. That is a distributable profit. That is a distributable profit. I repeat, distributable profit, that is means a maximum profit which law allows as per company's law, as per declaration of dividend rule, as per declaration of dividend rule, allows a company to distribute to the shareholders by way of dividend. And another concept, that is profit available for dividend. Means profit which is available, profit which is available and directors consider profit which the directors consider should be distributed after making provision for transfer to reserve and past losses. Means after making provision for the transfer to reserve account, past losses, the remaining amount which is available actually for the distribution of dividend and which is the part of profit. Means after making all types of provisions, after payment of all types of taxes, the amount which is remain with the company in the form of profit and which is available for distribution or for payment of dividend and which is considered as by director as a amount available for payment of dividend, that is after making all types of provisions, transfer to reserve and making provision for past losses, the amount available with the company, that is amount available after making all these provisions, the amount available is known as profit available for dividend. So definitions of dividend as per Institute of Chartered Accountants of India, as per Institute of Chartered Accountants of India, dividend, a distribution to shareholders. Dividend means distribution. It is one of the type of distribution. To whom? The distribution to the shareholders. Out of profit. Out of profit or a reserve. Out of profit or a reserve which is created for the distribution of dividend available for this purpose. Available for this purpose means available for the payment of dividend. Available for the payment of dividend. Available for the payment of dividend. Okay, I repeat once again. As per Institute of Chartered Accountants of India, defines a distribution to shareholder. Distribution to whom? Distribution of profit to shareholder. And this distribution is made by the company out of profit which is available or which is kept aside as a reserve for the payment of dividend. For the payment of dividend. Next, the Supreme Court has defined. The Supreme Court has defined it as, in case of a going concern. Then what is meant by going concern? A going concern means it is one of the accounting concept. It is one of the accounting concept means the firm, the organization, the company, the institute which is operating its business, and making profit, which operating its business and making profit. So a going concern, it means portion of profit. In case of going concern, dividend means portion of profit of a company, portion of profit of a company which is allotted to the holders of shares in company. Holders of shares in a company. The meaning is same, but the way of conveying the meaning is same, but the way or the words are different. Meaning is same. Means it is also in case of going concern. In case of going concern, it means profit, portion of profit of a company, portion of profit of a company which is allotted to the holders. Allotment to the holders of shares in a company means it is also profit which is distributed. Going concern means the concern which operates its business and making profits, known as a going concern. So these going concerns distribute their profit or portion of profit in respect of the shareholdings of that shareholders in the company, known as a dividend. Next point, features of dividend. Features of dividend. First of all, it is the portion of profit. Dividend is the portion of profit which is paid by company to its shareholder. Paid by company to its shareholder, known as a dividend. And this dividend, that is portion of profit which is distributed only out of profit of the company, and who gets dividend or which type of shareholders get dividend? There are only two types of shares: equity shares and preference shares, equity shares and preference shares. So both equity shareholders and preference shareholders get dividend. Equity shareholders and preference shareholders get dividend. In other words, the owner of own sources, the owner of own sources, the owner of own sources get dividend, but equity shareholder get fluctuating rate of dividend, and preference shareholder get fixed rate of dividend. Fixed rate of dividend. Okay, so own capital holders get dividend. Own capital holders are equity shareholders and preference shareholders. If the company has to issued equity shares, if the company has to issued equity shares with differential rights as to dividend, because there are two types of equity shares with normal voting rights and equity share with normal voting rights and equity share with differential voting rights. So if company issue equity shares with differential voting rights, and this right is in respect of declaring dividend, the terms of issue of such shares will decides the right of shareholder about receiving the dividend. Okay, there are two types of equity shares: equity share with normal voting rights and equity share with differential voting rights. If company issue equity share with differential voting rights, if company issue equity share with differential voting rights, then the right of the term of issue of shares, in case of equity share with differential voting rights is decided by company in respect of giving dividend. Dividend must not be declared out of capital. Dividend must not be declared out of capital. To declare dividend, first, after closing of financial year, finalization of balance sheet, the board of directors conduct their meeting. In the board of directors meeting, they decide the rate of dividend. So dividend can be declared only on recommendation of the board of director, only on recommendation of the board of director. And once the dividend is recommended and declared by the board of director, for the same, that is declaration, after declaration and recommendation of dividend by the board of director, after recommendation and declaration of dividend by the board of director, in annual general meeting of shareholder, by passing a resolution, is approved by shareholder in annual general meeting. By passing a resolution in annual general meeting, the recommended dividend is approved by shareholder, by through voting or through passing a resolution, dividend for any previous year, dividend for any previous year cannot be declared, dividend for any previous year cannot be declared once that year's annual accounts has been closed or has been approved in annual general meeting. Means dividend is paid only for current year, not for previous year. Once the dividend is declared and approved by shareholder in the annual general meeting by passing a resolution, it creates a statutory debt DEBT on company. Means once the dividend is declared, once the dividend is declared and approved by the shareholder, it's create a statutory debt. This approved dividend or this approved rate of dividend company must pay at any cost to the shareholder without any revocation, without any revocation. Dividend include interim dividend. So in short, what is meant by interim dividend? What is meant by interim dividend? Interim dividend means the dividend which is declared in between two annual general meetings, known as a interim dividend. Dividend must be paid in cash and not in any kind. Means any article, any good is not paid as a dividend. Dividend must be paid in the form of cash only or through electronic cash. Dividend is to be paid on paid up share capital of company. Dividend is paid upon paid up share capital of the company. Dividend is paid upon paid up share capital of company. And dividend cannot be paid on calls in advance. Calls in advance. Generally, the term dividend is used in the sense of final dividend or in the sense of annual dividend. If there is a specifically mention that this dividend is interim dividend, then there is, if specifically mentioned, then it is treated as an interim dividend. Otherwise, it is a final dividend or annual dividend. After listening this lecture, all of you have to write down definition of dividend along with its features, along with its features. Thanks for listening and watching.